All right, this is James Pelton, and I am here with Austin Clark. So I'm still on my 5-week road trip around the Western United States. Left Nebraska, went through Utah, Nevada. Now we're up in Sacramento, California. Then we're going to come down the coast and make our way back to Nebraska. So it's been quite an adventure for us. It's been always fun trying to find Airbnbs with good internet and things like that. But I found one here, and I'm excited to be here and talk with Austin Clark. For those of you, as we're waiting for people to kind of hop on and start watching, what I need you to do is hit the like button. So you see that thumbs up button right below the video. I need you to hit that. Again, that tells the YouTube algorithm to show this to more people. And then I need you to comment, as is my custom. Let me know where you're watching from. Again, that's always something I find fascinating on YouTube, is that I'm from Lincoln, Nebraska, but I'm interacting with people from the Philippines, the Middle East, Australia. It's just crazy how connected our world is compared to, even like 20 years ago. We're just super connected world compared to then. So I'm here today with Austin Clark, who is a fellow YouTuber. And what we would kind of like to talk about today are kind of what we're doing through the bear market. There's not as much crypto stuff. It's a lot harder to find content and things like that, and projects that we're excited about. So Austin, can you start out by just introducing yourself, telling a little bit about your channel?
Yeah, absolutely. So as you guys know, I'm Austin Clark. That's my YouTube channel as well. I don't have any fancy titling or labeling or anything like that. But yeah, I talk about all things passive income. Lately, like you, James, yeah, absolutely. I've been seeing how it's just, especially in a bear market like we're in, it's kind of hard to find a lot of great crypto plays. But just like crypto, I talk about all things, stocks, real estate. I'm actually, because we were just talking about this before we went live, I'm experimenting with drop shipping, where I'm starting my first ever product, and go subscribe to me if you want to see me fail at that, probably, but it's going to be really fun. But yeah, I'm trying to do all things, passive income, and just breaking out of that normal 9-to-5 life that I used to be in. So a little bit of background about me for everybody watching. I just got out of the military, doing YouTube and real estate investing full time now. And just all things investing in general, just trying to make money, replace your normal paycheck. And I love just documenting my journey and my successes and my failures.
That's awesome. Yeah, that's what I'm all about too, is just, I feel like I don't know enough to actually give people advice. So I just like, hey, here's the things that I've tried to do. And then I just kind of try to document, hey, here's what I'm trying. So I feel like we're kindred souls in that.
Yeah.
And again,
it's fun, right? It's fun showing not just your successes, but like, bro, look, I lost $5,000 here. And then you can look back a year from now and just look at that video and be like, man, I'm glad I learned that, right? Like, everybody can look at your mistakes, and instead of paying that $10,000 loss, right, they can just watch you.
Yeah, and that's exactly what I intend a lot of times, is like, hey, I'm going to put $5,000 into this so that you don't have to, and you can wait and see how it works out for me. You can live vicariously through me, and then if it works out, then you can definitely hop in there. That's one of the things I like to do. And
Absolutely.
Audience, by the way, I forgot to mention, we will bring up audience questions. So if you guys have something that you'd like to know, whether it be crypto, passive income, real estate, again, that's Austin's kind of bread and butter, and I want to talk a little bit about that.
Oh, yeah.
I'd also like you to comment. I was just drinking this LaCroix Black Raspberry.
Ooh.
Please comment, what is your drink of choice? I see Austin drinking the water. That's probably...
Oh, yeah. This is my drink of choice right here, Superman water.
There you go.
You can only get it here.
So Austin, I guess first question I'd like to ask you is, so you mentioned that you're full-time. You do not have an 8-to-5 right now. Is that correct?
That is correct. Yeah. And as terrifying as that sounds, but yes.
Okay. And how long have you been in that position where you've not had a day job?
I'm going on a little over a month now. So I literally just got out of the military April 28th. So yeah, a little over a month.
Okay. Well, congratulations. That's pretty exciting, but like you said, kind of nerve-wracking also.
Oh yeah.
So when you look at like your breakdown of what's paying the bills now, because you still have bills, right? You don't get a paycheck now, but you still have bills. What is a majority of what's paying the bills? Is it passive income, or is it real estate, crypto, or what kind of is paying the bills right now for you?
The majority is real estate, and that's why I absolutely tell people all this all the time. Like I still sprinkle it, and I used to, in my YouTube channel, I used to talk about just real estate and stocks a lot. I never really messed around with crypto a lot, just because I didn't know a lot. And then starting at about early last year, I started diving deep in like the DeFi space, investing into all these different things. And then as I started feeling like, okay, I'm kind of understanding what I want to get at, I started leeching into more of the crypto space. But yeah, lately I'm doing a lot of different real estate stuff and real estate deals as well. But the majority of my bills and expenses is mostly with real estate, passive income, rental, syndication, stuff like that, where I get dividends from what I invest in.
Okay, very cool. So as far as like the crypto bear market that we've kind of been in here recently, has that affected you very much? Like, was a big chunk of your income from crypto and now it's down, or how has that kind of affected you?
So as far as crypto goes, I always used risk capital. I tell people that all the time. You got to put risk capital. I don't treat crypto unless I'm just literally I dollar cost average into Bitcoin and Ethereum on my Coinbase account, and I've been doing that forever now. Like I just have some in there, like the blue chip stuff. But as far as like these passive income plays that I talk about and invest in, I don't. I have never allocated that into my estimated monthly earnings. Like, yeah, I do videos on like, this is how much I've made this month, or this is how much I'm on track to make. But I've never used that as like, I need to pay my mortgage next month on $1,500 I'm making from Drip Network. You know what I mean? Like it's all just supplementary income that I could hope for, but it's still gamble money that I would take to a casino and expect maybe a return or a loss on my money. So it's just money that I feel comfortable gambling, playing around with. But yes, uh, compared to my net worth, I still try to keep a very small percentage in crypto, but it still was. I've lost some significant amounts of money, but I have made some money as well, and it's been a really fun ride so far.
Okay, yeah, very cool. Can you discuss real estate? Because I think that's something that is maybe a little unique to what I usually bring. Can you discuss kind of what you're doing in real estate, and maybe particularly like, are there strategies that you're using that my audience, could start doing, like whether it being looking for rental properties, or like I run an Airbnb that
Mhm.
that I that I run, and yet you mentioned syndications, and then I know there's like housing funds. Can you talk a little bit about some of the things that you're doing?
Yeah, absolutely. So, how I even got started in real estate, and this is super applicable for anybody watching your channel right now, especially in the US. I can't speak for international, as I've never invested international. I know it's possible, but I just don't know the different laws with all the different countries people watch. But for me personally, I got started into real estate by simple house hacking. So, for anybody that don't understand what that is, all house hacking is you literally either buy a house or a duplex, triplex, quadplex, something that is still can meet a primary residence loan requirement. So, which is a 1 to 4 unit property, and you rent out either a bedroom if it's just a single family home, or bedrooms, or if you have, say, like you were talking about Airbnb, if you have like maybe a spare garage, turn it into an Airbnb, something where you can use the benefits of a primary loan where you either get zero, because where I was a veteran, I get 0% down where I only pay closing costs. And those are like the document fees and stuff that you need for actually taking the loan out on the property. So you have that super small barrier of entry. Or if you're not a veteran, you can do an FHA loan, a USDA loan if you're in a USDA approved area. All these different loans that you only get if it's a primary residence and it's not an investment property. You can really take advantage of that by just literally renting out different parts of the house. If you're a single person, I mean, that's pretty easy. But if you have if you're married, like you have kids, James, you can, again, get a duplex, triplex or something and rent out the units. So that's kind of how I started. So now what I do is, obviously, the properties that I've lived in, thanks to the military for moving me around, it's being rented out, and those are just passive income checks coming in with the surplus that I make on top of just paying my mortgage. Syndication. So if you guys don't know, a syndication is just a fancy term we like to use where we have a group of people that comes together, puts their money in a pot, and says, "Hey, I want to buy a large piece of real estate." So like for me, the biggest one right now we've done is a 52 unit apartment complex where it was about $1.5 million for the acquisition. And we all come together, put a large chunk down for the down payment / improvements that we can make over 3 to 5 years. And then usually in a syndication, how it works is you have about a 3 to 5 to maybe 6 year time span where you pay your shareholders of the people that invested in that piece of real estate, and you pay them back either quarterly, monthly, however they schedule it out. So that's kind of like a small little passive income. And then at the back end is when they try to sell the property. So it's kind of like flipping a house, but you're flipping a large piece of real estate over a large amount of time. And then at the back end, you get like a large chunk of your investment. So there's so many different ways that you can kind of get started. And I tell everybody, if you're scared, if you're terrified of even thinking of taking a loan out on a house, buy something like a REIT, right? Or go on fundrise.com and just invest and get exposed to real estate in that way. And then build up like REITs, like O, that pays dividends every single month. You get those dividends every single month. And then maybe you can save up over time for a down payment on a property from the REIT that you bought. So you kind of can take little baby steps that way if you want to.
Okay. Yeah. And I was going to, what I'd like to do is kind of like the easiest way for people to get involved, and then work our way to like what more complicated way. So you mentioned REITs, so a real estate investment trust. So that's probably the easiest way to get involved. And you mentioned Fundrise, and I have invested in Fundrise, and so yeah, that's probably like the absolute easiest way to get involved in real estate is you can just go to Fundrise, and they have like some things there that you can invest in. The problem that you'll find is if you're used to my channel, the returns that you get in real estate are not going to be like super interesting to you. You're going to be like, oh, 10%,
8% return.
Like,
yeah. 10%
exactly.
APY. What is that?
Yep, exactly. But it is a lot safer. Like we've seen the real estate market, crypto is going to be like this. So you're going to have high risk, high reward. Real estate is going to be more just kind of this solid going up. So Fundrise is a great way. Can we talk about like if people do want to buy a home? Okay, so most people, what's the best way to get started? You go find a property first, or is a syndication easier than going and finding your own home that you want to purchase, or how do you look at that?
So with the syndication, I would put that more towards the moderate to advanced level of investing in real estate, just because there's a lot of stipulations behind it. We can get into that a little later, but the easiest way and the best way to start out is you can't start out looking for a home. Don't start looking for anything. You got to find out, what is your goal? Okay. Because I tell people that all the time. What is your goal? What do you want to get out of real estate, or what do you want to get out of your investment? It's the same thing if you go to a job interview, right? You want to interview them and you want to show them what you can provide value to them. So you want to interview like your own goal. Like, what do you want to get out of this investment? Then you can kind of backwards plan, and that'll get you to the point where, okay, what type of investment do you want to look for? So if you want to start out in real estate, okay, if your goal is to buy a piece of property and you're only going to live there for maybe 1, 2, maybe 3 years, you can be like, okay, well, I know that I'm going to potentially have this property for 1 to 2 years. I'm going to live in it. Could I rent out a bedroom or 2 bedrooms? That's when you can kind of bleed into searching for that said property, where you can kind of build your search criteria, and you can be like, okay, now I can look for a duplex because I'm married and my wife probably doesn't feel comfortable renting out a bedroom, versus a duplex where it's you don't really associate with that separate unit. Or if I'm single, okay, well, I'm pretty comfortable having a couple of roommates that will pay for my mortgage and a little bit of cash flow. So that's where you can kind of backwards plan. So the first mistake I think a lot of people make, especially beginners, is just looking for a property or just talking to a real estate agent. Find what your goal is and then backwards plan that to allow you to already naturally find that criteria for looking for a property. And then it's super easy. And then, yeah, absolutely. You got to look at your finances, make sure you can actually qualify for said loan. So talk with your real estate agent, Google literally local credit unions. Local credit unions is where you need to find loans. Do not go to these cookie cutter, loan officers. Literally Google credit unions near me, and then talk to them, say, hey, what is a debt to income ratio? Hey, how much could I have if I have this much debt at time? And they'll really work with you, right? And you can get a lot of good rates that way. And then you can see how much property you can qualify for. So now you got your search criteria based on your goals. And now you got how much you can actually afford for a property. So you're not depressed when you go find this dream $500,000 home and you can only afford a $200,000 home.
Yeah, no, absolutely. I think that's a great idea. That's great advice of starting with the goal in mind, because it's going to be very different. So the type of purchases you're talking about, like if you get an FHA loan, which is 5% down instead of normally you need 20% down for most
Right.
banks, that you're talking about living there, living there and renting it out, or you're talking about living it and then flipping it eventually, or what? How do you kind of look at that?
Yeah, so I'm talking about literally living in it and then having either a bedroom or a couple bedrooms. Like for me personally, my situation, I was single at the time when I first bought my first ever property through the military, through my VA loan, and I rented out 2 of the bedrooms. And then I actually, just as a test, and I never did this again because it was like such a headache and I didn't want to deal with it, it was kind of a split level house. So I technically had 2 legal living rooms. So I turned the bottom one into an Airbnb, and I listed it for just the weekend because one of my mentors, he was like, hey, just try it out for a weekend, see if you like it. And if you don't like it, whatever, but you don't want to, think you're missing out on cash flow if you want to try. So I turned it into an Airbnb just for the week where I listed it, where they had a bathroom, they had a little bit of privacy. But I didn't like it because I didn't like actually managing all that. Yeah, so that's what I did is I rented out 2 bedrooms. I had 2 separate roommates. Each of them, one of them alone was paying for almost all of my mortgage. The other one was paying for the rest of the mortgage and then actually providing me some cash flow. And then obviously the military pays for your living and stuff. So I was banking all that. But for the most part, yeah, like you just start out if you're single, if you're just wanting to buy a property, be an investor, that's the easiest way to be exposed to real estate. And the safest way is literally have a government-backed loan, which is USDA, VA, FHA, something like that, and low barrier of entry, rent out a bedroom or 2. Or if you can find a good duplex or triplex where you don't even have to deal with a roommate, that's another option as well.
Yeah, and
Keith said FHA is 3.5. Yeah, it can vary from 3.5 to 5%, just depending.
Yeah, no, and I think this really highlights how different people are in different positions, and so you just have to take your goal and the position that you're in, and then what's the best way to get there. Because like I'm in a little different position. Like I already have a home, and I already have wife and 3 kids living there, so I'm not going to go out and probably buy a new residential home. I'm not a single younger guy. But it's kind of the same type of strategy. I want to show you just kind of my spreadsheet that I use for real estate. Oh, I have too many windows open.
Dude, I love your spreadsheets, by the way.
Oh yeah, I'm obsessed with spreadsheets.
When you do your weekly income videos your goal income videos, I literally copied that template for all of my crypto portfolio because it's really good.
Oh no, it's not that organized though, and
I like it.
Okay, good. Well, I do love spreadsheets, and so this is how I look at when I'm looking for a rental property. For most people, if you're not using an FHA or you're not going to live there, then you have to put 20% down. So that's kind of what I use is a down payment of 20%, and then I look around for like what the rent is going to be in a certain area, and then what my monthly payment's going to be on my mortgage, and then I add in some for maintenance, and then I kind of get this profit number. And that's kind of how I look at investing in real estate from my perspective. Now, the downside to not living there is I need $40K to buy a $200,000 house. Whereas if you're getting the FHA loan, if you're able to do the 3.5%, let's see how good my spreadsheet here is. Oh yeah, so you only need 7K.
Oh, there we go.
Yeah, there we go. So yeah, that's a really great way to just kind of show the difference from where we're at in life with wife and kids, and how we look at investments differently. And one other spreadsheet I kind of want to just show. I think people might find this interesting, but I make a list of so I've been looking in the Albuquerque area because they have really high rents compared to housing prices. And so then I go through Zillow and I just kind of find, hey, here's the price of some houses. Here's what I need for a down payment. Here's my mortgage payment. And then here's kind of the cash on cash return. So anyways, that's how I look through things.
Well, see, you actually are providing a really good point right here, James. So where you just talked about the locations that you're looking for, and you just said you're looking at those locations because of the cash flow and how high the rent can be. That's exactly what I was talking about, right? Where you define your goal first, then you backwards plan and find those locations and those types of properties that can fulfill that goal. So that's perfect right there.
Yeah. Because I found in Lincoln, where I'm at, rent is not very high compared to the price of homes. So if I buy something and rent it out, I actually don't make any money. It doesn't even cover rent. But then like in Albuquerque, housing prices are lower and rents are higher. And so, so can you talk a little bit more about syndications, and if people want to get involved in those, are they able to? I know for some of them you have to be a accredited investor and things like that. You want to talk a little bit about that?
Yes. So just like you said, it's kind of a barrier of entry, but it's not, right? So there's different types of syndications that you can invest in where you do have to be an accredited investor. And for those that you don't know, here in America, accredited investor, you got to be, what is it? You got to make at least $1 million within 2 years, or there's like stipulations on how much money you have to have and make, or your net worth has to be $1 million, or you have to make X amount of money. But usually to be an accredited investor, that's kind of a high barrier of entry, right? We don't start out as millionaires or 6-figure earners. So there is another, and I'm sorry, I probably should have actually looked back on my tax forms, because the way I invested in these syndications is I'm not an accredited investor. I'm not a millionaire. And I was able to be a limited partner, an LP investor within these apartment complexes that we invested in. And I forgot what it was called. I'm not a tax expert. I'm not a general partner expert where I create the syndications. I just invest into them because I like the passive benefits. But yeah, so basically there's different ways, and it's all about networking. Networking is so key, especially in syndications, because like I said, where if you do find these deals where you don't have to be an actual accredited investor, this is where you need to know people, right? Where my friend, for those of you who don't know, Bigger Pockets podcast is probably the best podcast ever if you want to learn about real estate. It's like the Facebook of real estate, where you can network, you can post about your deals, you can look them up. They have great podcasts for rookies, for normal people. And my friend, he was on the Bigger Pockets show, and that's how I met him, was through Bigger Pockets. And we talked. I added a ton of value to his YouTube channel and how he done things. So he, in return, we just talked and mutually benefited from each other for a while. And he was like, hey man, I have this deal. Here's the cap rate. Here's the cash on cash return. Here's what you can do. And it was like, you don't have to be an accredited investor, but I forgot what it was called. It's like a syndication, how to be a syndication without being an accredited investor. I'm sure if I Googled that, I could find it. But yeah, so those are different ways, but basically they still have some type of minimum requirement. So for me, to be in that type of investment, I would still have to have a minimum of, I think it was like $20,000. So it's still like a pretty heavy barrier of entry. That's why I would label syndications as a way, if you want to provide passive income to yourself, slash you want to have a large chunk of money to grow over time that you get access to. But the thing is, you have to prolong that gratification, right? You're not going to get a lot of money in the front end. You're not going to get a ton of cash flow, right? And throughout the time of actually owning that property, but you do get a pretty decent chunk at the end. And that's what I would suggest, along with, if you don't want to take that debt on to your name, because when you do a syndication, you're not actually personally taking a loan out. So a lot of people with a lot of money, what they do is they'll invest in syndications where they don't have to take, say, $400,000 or $500,000 or even $1 million on their name. They just give it to somebody else and then they perform.
Yeah, no, really good point. And a couple of syndication, I can't remember. I was trying to check while you were talking if you needed to be an accredited investor, but I'm going to put two of them up that I've been involved in. One is Sunrise Multifamily, and they buy like big like luxury apartment buildings, and then they kind of revamp them and then resell them. And I've been getting about 17% return on these. You might need to be, for a lot of them, you might need to be an accredited investor. I can't remember totally, but this is one. The other one is DLP Capital, and actually this is more of a housing fund that it's provided about 12% annually, but it's tax free. And that's another thing too. When you do some of these syndications, the money you invest in them, a lot of it you can write off for tax purposes. So yeah. Yeah, neither of us are tax advisors, so definitely.
Yeah, I'm not a tax professional by any means. Yeah. But yeah, so another great thing with syndications, just like investing in real estate in general, once you actually have a rental property, a syndication, Airbnb, something that you're not living in, you're able to do this fancy call called depreciation, where a house is, I think it's, you can correct me if I'm wrong, 27.5 years is how many years you can depreciate that home for every single year. So essentially, it's just a fancy term for, if you make X amount of money, you're able to take off how much you owe the IRS, because this property is depreciating in value. And it's basically an incentive for the IRS for you to provide homes and stuff for people. It's kind of like an incentive for real estate investors. So yeah, and so the same benefit that you would get for actually owning a property that you're investing with is the same benefit that you would get for syndication, where every single year I get what's called a K-1 tax form, where they give me and they say, hey, here's how much you lost, right? We love losing money when it comes to investing. So here's how much you lost. And I think last year I was able to write off like $1,800 on my taxes for nothing, like for literally just being a shareholder of this 52 unit apartment complex.
Yep, totally. And there's also, again, different people are going to be in different tax situations, but there's also a thing called opportunity zones, where there's certain areas of the country that the government wants you to invest in. And if you invest in real estate in these opportunity zones, then you basically everything you make is tax free. So there's like a lot of tax things you can do. Don't talk to us. We're just the investors. We're not the tax.
I couldn't even tell you guys what I am personally investing in to make me not a credit investor. I forgot the name, so don't take what I say as legal.
Yeah, that's awesome.
I just give people my money.
Yes, totally. And I do want to bring in some audience. I kind of forgot that we have them here. Real estate is a trash investment, Tello says. And it can be difficult. I mean, it's similar to crypto in a lot of ways. Like you can buy a property and then get renters, and they're bad renters, and it can be a nightmare, and you have to work with, evicting them. What I do with every rental I've ever had is I hire a management company to take care of it for me, because now you lose, 10% of your profit a month or 8% depending on, but I don't want to deal with evicting people and trying to, putting out ads to try to get new renters. But you're totally right there.
Can I touch on that, James?
Yeah.
So this is a great example, right? And hey, Taylor, I get it, bro. I get it. Real estate can be extremely annoying sometimes, but here is another really new mistake that I've even made. A new person investing in real estate could make, right? So creating generalizations like that based on just scenarios that you either heard of, or maybe you even it can really hurt your opportunity cost down the line for investing in something like real estate. So they said my grandma and uncle got people not paying rent. So this is where, like James was talking about, having that property manager, like you don't want to, when you invest, you want to make sure you're not buying yourself a job. This is the biggest thing a lot of people make, right? Instead, they look at an investment, but they're actually buying themselves more work. We invest to choose to get to financial freedom. So when we're investing in something like real estate, I don't want to buy a property that I now have to manage. So just like he was saying, I would rather take a little bit of cut from my cash flow every single month to look at a good, solid property manager. And even that property manager, you want to interview 4 to 5, maybe 6 of them in your local area. You don't just want to take the first one that'll come up. So that way you want to see what their criteria is of looking for a tenant. What do they look for in a tenant? How do they do their maintenance? How do they do all that? You want to make sure they are a solid property manager, so they're not always, in the back of your mind on common tenant problems. Now, obviously, you're never going to have 100% a perfect tenant, but you can implement a lot of these preventative measures to make sure your real estate investing experience is good. So you never want to take what someone's experience may have had on a generalization of real estate as a whole, because what they could have made a lot of mistakes that you could prevent by just listening to what they did and then implementing it. So you never want to create a generalization on any investment based on other people's experiences.
Yeah, no, it's like going in on a 7-2 in poker, and then sometimes you get a bad hand, sometimes you get a good hand, but it's like, well, that's not the outcome is not necessarily how you should determine next time if you're going to get in. Like real estate is not a trash investment. It can be, but it's a good investment in general. And 2 things I was going to say too. What were they? I think they were good. Oh yeah. First off, another thing you can look at is short-term rentals instead of long-term rentals. So Airbnb, I've had a lot of success with. Actually, I have a house that I rent from the landlord, and then I Airbnb it out, and there's like a $400 a month arbitrage between those two.
That's awesome.
So that's, there's so many different things that you can do, different ways you can look at things. Alex says $200,000 in New Jersey buys you a little more than a big bathroom, and that is true. You have to look at the right area of of the country. Because again, I'm looking in the 200K region because I know I'll need 40K down, and I don't want to put much more than that. So yeah, I don't go look
Yeah.
in New Jersey or California. I go look in Alabama, New Mexico.
Alabama, love Alabama.
Oh yeah, Alabama's the best. How
That
do
and
you
Tennessee.
determine?
Tennessee's really good.
Yes. How do you determine the rental prices in those specific areas? Do you have any tools that use that? Honestly, a lot of times I just use Zillow, or like there's different tools online where it's like determine the right rental price for you. And sometimes I use those as just like a ballpark. And then when I'm digging into a property, I might actually even sometimes the management companies in the area will do like a deep dive and tell you, hey, here's what we think, here's what we would advertise rent for at that place. I don't know, Austin, do you have any thoughts on that?
Yeah. So what I do is, again, backwards planning for my goal, right? So now if we're already under the assumption that I know exactly where I'm looking, I should have already built connections and relationships to the local property managers there. And I should have, at this point, I've already established who I'm going to be using. So then from there, I'll be like, hey, so I'm in Tennessee, I'm looking at property XYZ, and I'm thinking about, getting it under contract. So how much do you think roughly it could rent for? And usually they'll give you an answer, either not that day, just rough, or maybe they'll take a day or two to get back with you. So while you're waiting on that answer, another thing you could do for yourself, if you don't want to talk to a property manager, go on Zillow, go on Trulia, realtor.com, any of these MLS websites, and click on rent. And then say that house is a 3-bed, 2-bath, or whatever house you're looking for. Go on those MLS listings for rent and type in those specific criteria and see how much they're renting for right now. And then look and see how long they've been on the market for. Because if you have a 3-2, for example, and you're wanting to rent it for, say, $2,000 a month, and it's been on the market for 5 months, you're probably not going to get $2,000 a month for this property. Maybe you're looking for more towards $1,800 or $1,500. So you can kind of look and see what the market is telling you right now. And then obviously the best answer is property manager for sure. Yeah. Keith O'Brien said Rentometer is good. Yeah. Rentometers are really good. When it's a premium product, you can do a couple free options, but yeah, you got to pay for that one.
Yeah, absolutely. And I kind of wanted to show just so like here's a property that I was looking at. Honestly, I've not looked as much into real estate because for me, I found that crypto is easier and there's less
easier.
Legal work involved. And so I've stayed away from real estate for a while just because I found crypto to be so much easier. So here's an example of a house I found in New Mexico where the Zestimate was 323K. And then I think they had, and then it'll kind of tell you, hey, here's what you're going to need for a down payment. Zillow is actually a pretty good tool. But then rent in this area, their rent estimate was 2K. And so right away I kind of saw, oh, this could be a good property for what I'm looking for. So Zillow is a good place, but yeah, that's kind of, I used to spend a lot of time just looking around on Zillow. And we could talk a whole bunch about motor home parks is another type of real estate. Yeah. There's all sorts of cash cow. Things. Yeah, it really is. You can find the right place. So let me see if there was other questions. Alex says, yeah, you are more into crypto because you are like me, a true degen, and real estate does not offer high enough returns. It's so true, actually. Like, real estate, and for some reason, crypto is just more fun. Like, I don't know. It'd be hard for me to make a lot of. Yeah, it'd be hard for me to make a lot of videos on different real estate. Like I could do one or two here or there, but there's so many fun crypto projects. Definitely. Let's see. I think crypto is as a lower barrier to entry. So I'll keep looking through the comments to see if there's anything to bring up. Austin, can you talk about other things that you're doing during the bear market? You mentioned drop shipping store. Are there other things that you would recommend or things that you think might be good for people?
Man, so I think the biggest thing in a bear market is investors are made in bear markets. And not just talking about wealth creation as far as buying low and selling high, like getting in at cheap prices on anything, stocks, crypto, whatever. But also is when it comes to a bear market is education, because in a bull market, right? I tell people this all the time. in a bull market, especially like last year, what was happening, you could throw money at anything and look like a professional investor because you would be making 50%, 100% returns a week. So you're kind of just trying to build a lot of cash versus actually educating yourself. Now you can actually take this as an advantage of slowing down, making super calculated decisions when you invest in crypto and stocks. If you are investing in real estate, you can really make sure you're making the best decision possible, but really just educating yourself on other things. What other skill sets could you add that can provide some monetary benefit? So that's why I was telling you I'm playing around with drop shipping. I've been kind of interested in drop shipping for years. E-commerce is a sector of business that is always growing and it's always exploding. So I've been really just trying to make myself kind of challenge and kind of make myself uncomfortable to learn different ways of making money. So that way I'm not just tied to, say, real estate, right? All my real estate portfolio could go down tomorrow. Well, what would I do then, right? Or I'm not just tied to crypto, or I'm not just tied to my M1 finance account that provides me dividends, right? So there's different ways that you want to make sure you're not just diversifying yourself with investing, but diversifying yourself education-wise on different ways to build passive income.
Yeah, no, absolutely. And somebody brought up a good question I wanted to hear your thoughts on.
Yeah.
Let's, as in real estate, we are seeing very high inflated prices. Do you expect housing prices to drop? I know that's kind of like in crypto. Do you expect Bitcoin to go up or down? But what is your thoughts on it? Is now a good time to get into real estate, or what are your thoughts on that?
I think the best time to get into real estate was yesterday. And then after that, probably tomorrow, right? So when it comes to real estate is the slowest moving asset out of anything we're talking about, right? Crypto moves 100x in 5 seconds versus real estate. It takes about a month to 2 months for any type of transaction to go through. So naturally, real estate prices and stuff usually take a lot longer to change, trends to change and stuff like that over time, just because of the simple process. It takes so much longer to buy and sell versus something as easy as a stock or a piece of crypto. So when it comes to housing prices, yeah, I mean, you can try to time the market, but it's the same thing as timing the market versus time in the market. So it's the same thing with buying a piece of real estate. If your goal is to buy X amount of cash flow through real estate, if you want to get X amount of cash flow through real estate, it doesn't really matter. I mean, yeah, it can matter if you get, say, a little bit cheaper of a property, but over time, I tell people this all the time, opportunity cost can really hurt your investment. So if I was, say, if I just had a ton of cash that I was sitting on and I wanted to deploy into a property that maybe the housing prices would be cheap a year from now, what you're sacrificing in the front end, if you were already able to buy a property right now, you would sacrifice a year of appreciation through that home. You would sacrifice a year of cash flow you could get through that home, tax benefits, property pay down, because there's 4 different ways a property can make you money: appreciation, cash flow, principal pay down through the loan itself, and then the actual tax benefits. So I don't see housing prices going crazy as far as dropping. I mean, I think I was looking at a study a couple days ago. The average medium home price is still ever increasing in value. I could be wrong. I forgot which one that was. But yeah, I don't see anything going crazy right now. I still see 4 to 5 years of growth, but I could be wrong, right? I'm not a real estate expert, DeFi expert, anything like that. But I would rather just time in the market versus timing the market.
Yeah, no, and I totally agree. People have been saying that, we're in a bubble and that prices are going to deflate here soon, but they've been saying that for like 5 years. And so,
yeah,
if 5 years ago you thought, oh no, I can't get in, it's a bubble. It's kind of similar to crypto in a lot of ways, where people, were saying, oh, bear market's coming back in October, but like I, have, 5x my money since October. So it's like, well, good thing I didn't just wait until the bear market.
Exactly.
And I think it's the same with real estate. I also really like real estate. Again, I'm going to show you guys, I have all my spreadsheets, but the way that I look at things is I have these buckets. So I have like my degen plays where, you might make 40% monthly, but you might lose all your money also. Like it's a 50-50 shot. Then I have like these DeFi plays that are, maybe 20% a month, like drip and EMP, but you also might lose your money. And then I keep taking my money from these riskier places, and then I move them up to safer places. So like yield nodes is, 8% a month, but it's a little safer. Then Freeway is like a pretty safe crypto play, but it's only 2% a month. And then I kind of have real estate as like the safest of the investments where you might only make 1% a month, but it's going to be very safe. And I like real estate because, if everything else fails, people still need to live somewhere. And so
Yep.
I figure, single family homes, especially, is, that's going to be something. But again, we're not financial advisors. This is just
No.
the strategy that we have.
And that's
and we have
really good. That's pretty much exactly what I do is I take all of my gains from crypto and stuff. Yep. And I plug it in. I'm actually, it's funny you say I'm doing a video where I'm talking about my passive income funnel, where I take all this money and where does it end up going? And yeah, I leapfrog it from all these different portfolios into mostly it ends up in my M1 finance account and real estate.
Yeah, absolutely. Yeah, it's cool, yeah. And the reason that I go into some of these higher risk ones is because if you're looking for 20K a month, okay, in this spreadsheet, here's how much you need in order to make that happen at the different levels. So again, a lot of people, you don't have $2 million sitting around, but you might have 50K sitting around. And so that's where it's like, okay, we'll start here. And then we'll, as our wealth builds, we'll start diversifying it into safer options. So yeah, again, that's cool that we have kind of a similar philosophy. And Katsato has an opinion. Crypto is a scam bubble, so soon will pop and disappear. And I've been hearing that for many years. I've heard that crypto is a scam bubble. And actually, May 2021 was when I stopped listening to people saying that crypto is a scam and it's going to disappear. Because in May of last year, crypto, crashed, it plummeted. And I remember thinking, oh, yep, this is where crypto's gone. And then in June, it came back stronger than ever. And then I said, you know what? I'm not going to listen. I made a mental note. I'm not going to listen to anyone else who says that crypto is going to disappear, because it seems like it's here to stay. But what are your thoughts on that, Austin?
I mean, it's just, you're always going to have, just like you were talking about earlier with real estate, there's always going to be these, people love to be the doomsdayer, but then there's also, and I think this is one of the things that kind of separates investors versus just listening to the noise. And that's, you're going to have these people, these doomsdayers that say that there's going to be a bubble, there's going to be a bubble, there's going to be a bubble. And at some point they're going to be right. And then that's when they're going to be like, I told you so. Right. But at some point there will be a correction. There will be a risk. It's because real estate, stocks, crypto, everything, there's always a person at the end of that buy and sell transaction. And it's all based on human emotion or a bot that has made at the end of the day, it's someone that made it. So it's all human emotion. And humans, like I tell people this all the time, so we're happy, we're sad, we're mad. We can experience the whole variety of emotions all in one day. And that's the same thing with the market, man. You got people taking profit, you got people panic selling, you got people buying and FOMOing. I mean, it's all these emotions into one graph. So, could there be a bubble? Man, there could also be a bull run. There's so many speculations you could have, and the only information we have is the past. And every time we look at TA, right, trading analysis, technical analysis, that's only one way of looking at anything, and you can't just dictate everything on the past to dictate the future. So that's my philosophy.
Yeah, nope, totally agree. Totally agree with that. I feel like I had something. I keep forgetting what I was going to say. I feel like it was something really good. Oh yeah, that's what I was going to say. One thing I've noticed too, there's a YouTuber, I'm not even going to say his name, but it's very easy to just poke at investments people are making and say, oh, this is a scam. This is a scam. This is a scam. This is going to fail. This is going to fail. This is going to fail. But never actually saying something that's going to succeed. It's like, okay, you've said this is a scam, this is a scam, this is a scam. Well, what are you doing with your money? And it's much easier to just poke at other investments rather than actually standing for, hey, I think this might be a good investment. I've noticed that where there's some YouTubers who make their living off of just saying this is a scam, crypto's a scam, this is a scam. But it's like, well, so what do we do with our money? You never say what to do with our money. You just say everything's a scam. So that's just something that I was thinking about as well.
Yeah. I mean, you got to take risks, right? I think, especially because I'm young, and I try to tell people this all the time. I hate that. And this is just the reality of being a content creator is it may look like I only invest in crypto, but my net worth, the majority of it's in real estate. And then the second part is crypto. I mean, not crypto, in stocks. And then the small little bucket is, oh my God, your box is cracking me up. And then the small bucket is crypto. So it's like but you still got to take that risk, right? Because I'm 20, I'm about to be 25 years old, literally this month. My camera's going up. So I don't know if you know this, James. This is kind of a blueprint with me. I got a Canon M50 and it loves to go off at random times because it's not made for live streaming, but it's all good. But
Nice.
you know, I take little risks and my risk tolerance is a little larger because I'm so young and I have, you know, a lot longer to live to create more money if I do lose it, like in Time Wonderland. So, you know, it is what it is. But I think if you want to really create life-changing wealth, you got to take shots. You got to take risks as far as, you know, maybe, you know, because when I was investing in stocks and stocks only, I was still trying to take a little bit out to put into speculative plays like penny stocks and stuff. I made some decent returns, but I also got burned a lot. So, you know, this crypto world is just like the world of penny stocks when it comes to investing in the stock market. So, yeah, you can't have that mentality of always thinking everything is a scam. Like, you got to make sure that you at least question things. And, you know, even if they are super, super high risky, you can still put your money into something that could maybe 100x tomorrow, but that you got to make sure that that money is risk capital, money that's not going to affect your day-to-day tomorrow or a month from now.
Yeah, totally. So what I'd like to get from you here in a minute, we have a couple questions. I'd like to get like your top 5 plays right now. Like, what are you most excited about in passive income? It could be real estate, could be your drop shipping, could be crypto projects. So think about that as we answer a couple of these questions. But the first is, how do you feel about judicial and repository auctions? The only auctions I'll let Austin.
Repository.
Yeah, I think you might be right. The only experience I have with auctions is I've done some like foreclosure auctions, but what I didn't like about those was usually the first thing you have to do is evict whoever's in them, and that doesn't go along with like what I want to be spending my time doing, is like buying a property and then the first thing I do is evict someone. A wife or a single mom with 3 kids or something like that. So I've not really been involved in any auctions. I know there's there's tax. People haven't paid their taxes. There's a lot of auctions, those types of things. Austin, have you ever gotten involved in any of that?
I haven't personally invested in anything like that. I think it's still kind of a trend in TikTok. I blame TikTok for this, where it kind of got a trend within the real estate world of people kind of like that, judicial and repository auctions, where they go to tax liens and they go to the county's tax assessors and they pay off the taxes of said property. And if they have a year, like a cool down period, and if they don't claim it or whatever, it's theirs. I've heard of that being a very lucrative strategy, but yeah, I haven't personally been exposed to that.
Yeah, and it's actually kind of fun, those tax ones, because they don't tell you what the property is. And so they just tell you, here's the tax that's owed on parcel XYZ.
Yeah.
And then if you buy it, I've heard this from friends, but if you buy it, then it's like, surprise, here's the property. And sometimes it has like a house on it. Sometimes it's just land. Sometimes it's land out in the middle of nowhere that there's not even road access. So it's kind of fun. It reminds me of storage unit wars. I don't know if you ever watched that.
Yeah,
you buy these storage units and
you buy it sight unseen, or maybe you can peek in there a little bit.
Yep. Austin, what have been your biggest losers?
Oh, okay. What have been my biggest losers? Okay, so I'll start off in stocks. So my biggest loser in the stock market was probably, let me see. I'm going to pull up my M1 Finance account, because there was this one and I got it was never coming back. But while I'm waiting on that to load, if we're talking about crypto, biggest loser ever, Time Wonderland. I love referencing this story because, this was probably one of the first, not one of the first, but one of the handful of projects that I got kind of burned in because I was still learning, right? I lost about $1,700, $500 to be exact, $17,500. And, it kind of sucks that you lose that money, but at the same time, it's like I learned so many red flags and what to look for, what to not invest in. I learned so much through that experience that, hey, it is what it is. It's kind of like people go on debt for college. Well, I paid that money to learn that valuable lesson. Under Time Wonderland, I think the next biggest thing that I lost a good chunk of money in was Anchor Protocol. Someone said UST has to take the dub, right? No, I wish UST took the dub, but no. Anchor Protocol, I lost a decent amount. I'm actually doing a video on all that, so I don't want to say exactly, not because I don't want y'all to know. I literally told you how much I lost in Wonderland, but it's kind of a funny video I'm going to make on my lessons learned exactly it's literally going to be how to turn X amount of money that I had into a certain amount of money. That's gonna be really funny. But yeah, UST was was a pretty heavy loser for me. But other than that, it was KMI. So stock ticker symbol KMI. Kinder Morgan. Let me see here. It was a pretty that's not it. I can't think of the stock, but I lost a decent amount of money in that one just because it's a dividend payer. It's not KMI. It was a dividend payer, but I was really thinking it would maybe over time improve. It didn't improve. It just kept going down. So yeah, that was my biggest loser. It wasn't KMI though. I just looked at it. It wasn't that one. I can't get it to load though.
It's different stock. Yeah. My biggest losers, Olympus, Dow. When I first got into crypto, I put 70K into Olympus,
oh
70K
my
into Strong, and 5K into Drip. And my Drip 20-30x. Strong did really well up until recently, and Olympus just went straight down. So I think my 70K in Olympus is now worth like 1,500 maybe. So, and then I did lose about 35K in UST. So those are definitely my biggest losses. I lost some in Time Wonderland.
Did you choose to just sell your UST, or are you still holding on to it?
So when it depegged, at one time I had like 120K in Anchor, and I slowly was taking it out. And then when it depegged the first time, I sold a bunch, like down at 86 cents. And then it kind of went back up, and so I didn't sell the rest. I was like, okay, maybe it's going to be fine. And then I woke up the next morning, and it was down to like 70 cents. And so then I sold a whole bunch, and it was down to 40 cents, and then I sold the rest at 40. So I am not holding on to any of it. I cut my losses and learned my lesson. But yeah, so that was a hard lesson. But yeah, I ended up losing about 35K total, I think. So, well, hey, as we close up here, would you want to go through maybe your top 5 or 6 or 4 or 3, however many you have, of what you are most excited about through this bear market? So it could be your real estate, could be, and maybe like thinking specifically about things that other people could get involved in if they wanted to.
Absolutely. So the first thing that I am most excited about, and this is the stock market, and I'll tell you why. I know a lot of people would probably wanting to me to talk about crypto, right? But if I'm being honest, the most thing I'm excited about is crypto, is stock market, because here's the thing. Back in March of 2020, when the C word, because I don't know if YouTube will still demonetize you if I say it right, but at the height of the C word, right, in 2020, in March, the stock market was super low. And I kept telling myself, I was like, it's going to go lower. It's going to go lower. I'm going to wait, because I had a large chunk of money sitting on the sidelines. And then literally I'll wake up kind of like how you did you were talking about, you woke up and UST was depegged. I woke up and the market actually started going a little bit back up. And I was like, man, I missed that chance on getting in a super low entry price for a lot of these stocks. So now that if you look at the S&P 500, it's been taking a dip, and ever since it's been going in a downward trend. Now, obviously, it's recovering a little bit. I've been going heavy into investing in stocks and dollar cost average again. I use M1 Finance. That's what I use. It's just set it and forget it. Auto deposit every single week. So I'm actually kind of reaping the rewards now of seeing my portfolio get pretty high as far as return wise, because I took advantage of what's going on right now with this bear market. If we're talking crypto, one thing that I've been making a ton of money in, as far as crypto goes, that's still through this bear market, EMP Money has been pretty crazy. EMP money, yeah, I mean, you can agree. EMP money has been nuts. Like, I don't know how they do it. I'm not a DeFi expert, but the boardroom, man, I've been making some decent money with that. But the most thing I'm excited about is YouTube. Obviously, now YouTube can be kind of this double-edged sword on, is it truly passive income? Because it requires a ton of work in the front end, a ton of planning, scripting, writing, filming, editing, all that. But in the back end, after you hit that published video, you reap the rewards of the passive income from the of the videos. So I think that will be my last, top three thing of making passive income for myself, and how that can translate for anybody watching here. Yeah, because of course you're like, well, Austin, I don't want to click that record button. Find something that you can really just monetize. So for me, it's YouTube, but what is something that you're passionate about that you can really connect with people? I hate referencing Gary Vee because a lot of people find Gary Vee cringy, but I do agree with one of his points that everybody has a story, everybody has a brand, and it's up to you on how you want to represent that brand, right? So whether you're good at filming, whether you're good at writing, podcasting, blogging, anything that you can do to show your journey of what you're doing with your goals, I highly suggest you to take action today and try to monetize that in some way, because I promise everybody has a brand, whether you want to admit it or not. And I think that's super powerful as far as building passive income in the future.
Yeah, I think that's a super important point. My number one piece of advice for people wanting to create passive income, my number one piece of advice, the easiest way to make passive income is to develop an audience. Is to start getting content out there. And so that doesn't have to be YouTube videos. If you're not comfortable with that, you can start a blog or something like that, but start a podcast. But it's just, I don't know, there's a lot of power in, because even if there's affiliate links, there's, if you ever start your own business and want to start selling a product, you need an audience to do that. And there's just, I don't know, creating a training course for any project, you need an audience. And so that would be like my number one advice, probably, for people wanting to create passive income. And then someone had a question. Let's see. Can you share profit-taking strategies and how you withdraw into cash for crypto? Austin, do you want to talk about your philosophy in taking profit?
Always take profit. No, I'm joking. Yeah, you always need to take profit. I think the biggest thing is people get greedy, all right, and people think it's going to go higher. It's going to go higher. Always take profit. And again, this goes with real estate, like we talked about earlier. What is your strategy? What do you want to get out of crypto? Are you looking at crypto long term, like you just want to set it and forget it, or are you wanting to be active in crypto? Because then that'll decide what investments you want to do within crypto. But when it comes to taking strategy, I personally take 50% off the top of anything I make. When it was more bullish in the market, I was doing weekly profit. Now lately, I've been doing maybe bi-weekly to every 3 weeks when stuff gets added up. Right now, currently, as of recording of this stream, I'm doing a documentary for a month-long video where I'm not touching it for a month of all my different passive income DeFi projects. And I want to truly see how much money it generates versus what the yield is actually advertised for all this stuff. And I'm going to show exactly how much that makes. So then after that, once I do that video, I take 50% off the top for myself for just holding it into stable coins. And then everything else I'll reinvest. And then as far as turning that into cash, I take everything either through Qcoin or Binance, and then I'll link my fiat bank account to Binance, and it'll go in from Binance to my fiat bank account. Or if I'm using Qcoin, I'll take it from Qcoin to Coinbase, from Coinbase to my fiat bank account. And that's how I do it.
Okay, yeah, thanks. And I was trying to pull up some of my projects. So I can't get MetaMask to work while I'm on here.
Oh, yeah, and I want to highlight this real quick because this was really funny. Olorp says, bro didn't take his own advice with Sphere. Yes, I will 100% agree. Yes, I didn't. So I was up a lot with Sphere, and I didn't cash out at all. But that was like one exception.
Yeah, well, do as I say, not as I do, right? That's what yeah. So the way I do it, I have a list of projects to check, okay? And so I just have this big spreadsheet, and then I kind of just know, like, I know, okay, drip is probably like every day I can go in there and I'll have, $700, $800 in there. And so then for each of these, when it gets to a significant amount, maybe 200, 300, whatever dollars, then I go log into Drip or EMP Money, And I kind of do like you, a 50-50 strategy where it's like half the time I'm going to just recompound it and half the time I'm going to take profit on. So if I'm taking profit, then I'll go into EMP Money and claim my stuff, sell it for BNB, and then I just log into Binance and send my BNB that I've made over to Binance, and then I just have it ACH hooked up to my bank account, and then I just withdraw. I think I have a $5,000 limit a day on Binance.us. But so then it kind of just depends on what bills I need to play, because like you, I don't have a day job. And so it kind of just depends what bills need to be paid. And, if you're going on a 5-week trip, I might need to take a little bit more profit than at other times. But yeah, that's kind of how I go about it. So, all right. Eric wants to know, what is the safest stable coin you pull profits to, or do you hold in BTC, F, or AVAX?
So when I send stuff to like my Coinbase wallet, sometimes it just depends on what the price is. Do I feel like it? Do I need the money? I'll put it into Bitcoin because, like I said, I'm still dollar cost averaging every single week with my Coinbase account into Bitcoin. But if not, I will literally just send it to my fiat bank account. I have a high interest savings account through Marcus Goldman Sachs. So I put a lot of my money just stored in there. I know a lot of people are probably cringing right now. Oh my God, you're using a savings account. You're getting, inflation is killing your money. But yeah, I still store cash just like I store stable coins, just like I store anything else. But yeah, that's how I do it. I'll if we're talking about stable coins, I'll go to KuCoin. I'll turn it into a USDT tether, and then I'll send that tether to Coinbase, and then I'll obviously sell that tether for cash, and then take that and put it into my fiat bank account. Now, if we're talking about BNB or Binance, I'll literally send it BNB stock, and then I'll either sell it for cash there, or if it's BUSD, whatever.
Yeah, and that's similar to what I do. I was trying to pull up, my laptop's not working correctly, but I have, some of you have seen, I have a bunch of KuCoin dollar cost average bots. And so if I have extra money sitting around that I don't need for expenses and I'm not recompounding back into the project, then I try to just send what I have left over into my KuCoin account just as USDT, just because that's what KuCoin uses. I don't think USDT is the best stable coin. Probably if I was going to put my money in a stable coin, I would say USDC or BUSD are my two favorite. But I send it to KuCoin, and then I let my dollar cost average bot just buy. I buy Flux every day, Bitcoin every day, Ethereum every day, DAG every day, BioFi every day. And
see, I'm not a whale like James. I buy once a week. I can't afford to buy every day yet.
Well, I don't know if I can either. 5-week road trip, and my funds are drying up. So, and drip keeps going down. Drip has been my bread and butter for a long time, and it keeps going down. So I'm, I have less money to throw around than I used to. So, that's always fun. So, anyways, we've been going for an hour here. So that's kind of what I was shooting for. So this was a great conversation. Great to hear. I actually didn't know that you were this much into real estate. So I think that was kind of a fun direction that our conversation took. And I hope that was helpful for people watching. As we're heading out here, audience, if you could please go over to Austin's YouTube. I posted the link earlier, but let me post it again here. And give him a subscribe. Watch some of his videos. Give him a like. Learn from him. Again, a lot of times people think that YouTubers are in competition with each other, but we're not. You can watch two people's career. If you had to pick one YouTuber to watch, then yeah, maybe there'd be more competition. But you can watch as many as you want. And so I think you should go watch. I'm subscribed to Austin. I watch his videos. Let me put the link.
I appreciate
here.
it, man. Thank you so much.
Yeah, you are very welcome. And appreciate audience. Appreciate you guys showing up. Again, me and Austin could have a conversation, but it's more fun having you guys along. And Austin, appreciate you coming on here and taking some time to teach us here today.
Absolutely, buddy. This was a fun time. We need to do it again sometime.
Yeah, nope. I am definitely game. So I hope everybody has a good rest of your day. Enjoy. I'll have my numbers for May video out here in about 30 minutes. So everybody be looking forward to that. So it'll be soon. So nice. Thanks, Austin. Appreciate you, man.
All right. See you later, dude.